Hello, everyone. This is William and Abraham for PropertySold.ca, and today we're talking about saving money on your mortgage. Abraham, when people take out a $250,000 mortgage, they're not exactly paying only $250,000 back to the bank, are they?
No. There's interest involved, guys. Everyone knows that. And the interest you're going to be paying back to the bank can be quite extensive if you talk about long amortization. So we're going to talk today about how to reduce that.
Yeah.
And just to give you an idea, guys, a $250,000 mortgage at 35 years amortization, 5% interest rate, let's just use that number as an average, you're paying back $276,000 in interest.
That is more than the $250,000 loan you took.
Yeah, exactly. And you want to try to look at ways of reducing that amortization, because the longer the amortization, the lower the monthly payment, which is great, but that's just principal, less principal you're paying.
Yes.
The interest stays the same. So we want to look about reducing it. And for example, a 30-year and a 25-year amortization, just to really nail home the difference between the two. If you're looking at a 35-year mortgage versus a 30-year mortgage, we talked about $276,000 over 35 years, $230 over 30 years.
So $40,000, $46,000 less?
Yeah, and you were talking at 25 years, $186,000 in interest. So there's huge savings to be had if you can reduce that.
Yeah.
And there's easy ways to do it, guys. I mean, the simplest and easy way, you're talking about your payment frequency.
Okay.
Biweekly accelerated is something all banks have, well, almost all banks have. And what that is your monthly payment is divided in two. So $1,000 a month, $500 every 2 weeks. You pay it every 2 weeks, and at the end of the year, because there's 26 biweekly periods, you paid 13 monthly payments.
Okay.
And one monthly payment extra you didn't even realize.
Okay.
And what that one monthly payment translates to is about 5 to 6 years in saved amortization. So we're looking at 35 down to 30, and you haven't done anything other than change your payment frequency.
Okay, so just paying your mortgage every 2 weeks instead of 5 to 6 years off your amortization.
Exactly.
And that's 5 to 6 years of mortgage payments that you don't need to pay.
Exactly, yeah. Money in your pocket, the sooner you're mortgage free, the better. And on top of that, there's other features that the banks do allow. Double a payment, so you can double anywhere from usually $100 up to double your monthly payment if you have the extra money. If you feel that, listen, we got more income this year, let's increase it by a certain amount.
Okay.
So you can do that sort of thing. And one extra monthly payment a year, again, is that 5-year savings. It's exactly like doing a biweekly accelerated. Just one extra payment a year can save you, again, another 5 years off your amortization.
Okay.
So that's another thing you can do. Also, the lenders also allow you to do a lump sum prepayment. You come in some money or you have more money to put down towards your mortgage. You can put up to, well, in some cases, 25%, 5% to 25%, you can put down towards your mortgage as a lump sum prepayment. And that brings down your mortgage balance by a certain amount and cuts that amortization again. Because any extra money you put down, remember, all these extra money that we're talking about you're putting down goes to principal. So that'll lower your amortization, again, lowering the overall cost of your mortgage.
Okay, and I guess even if it's any amount, even if you don't have 20 or 10% to pay down, even if you pay, let's say, $2,000 this year down towards your mortgage, you're not going to pay interest on $2,000 over the remaining of your amortization, whether it's 30 years or 35 years.
That's right.
So take out a calculator and calculate, 5% of $2,000 for 35 years.
Yeah, and you can really save a lot of money. And talk to a mortgage agent. We're able to do some calculations for you to see where the numbers land. Now, 2 things to remember, guys, I want to mention. When it comes to renewal time, make sure you fight for your interest rate. We're talking about the bank's going to give you their rates at the time of renewal. Take that, shop it around, talk to your bank, make sure it's the lowest rate they got. First of all, shop it around, talk to a mortgage agent. We can bring it to all of our lenders and find out what the lowest rate is for you and report back to you. Because, guys, you're signing for the next 5 years, for example, 2-year, 3-year mortgage. That's money coming out of your pocket. Make sure it's the cheapest cost to you by talking to somebody else.
So even if you went with a bank when you first got your mortgage and the term is coming due, they'll send you a letter and say, you can renew at this rate.
Yeah.
You don't have to.
No, you don't have to. That's your time to shop around. The mortgage term is up. You're the consumer here. You have all the choice in the world, so you can go anywhere.
Okay.
So definitely talk to someone to check it around. And even for the people who are stuck right now in a 2-year remaining mortgage from a 5-year, and they're at a high interest rate, guys, consider breaking it, because we're coming off the lowest rates in history. 2010 for Canada was the lowest rates in history. Beginning of 2011, where we are now, it's still close to that. And if you have a 6%, 7% interest rate right now with 2 years remaining, you can still break that. It'll cost you a penalty, but the savings over time, over the next 2 years at a lower interest rate, sometimes can be double to triple. So the numbers tell the tale. Talk to someone who can do the calculations for you, can bring you some options, and see whether it's worth it or not. And the other thing to remember, if you are renewing in 2 years, we're going back up to average rates. We're coming off the lowest in history. The only way forward, according to the industry, is going to be back up to at least average rates. So when you renew in 2 years, you're going to be renewing at whatever rate you have now, 5-6%, because that's about average. So you break it, take a 5-year now at today's rates, You save a lot of money.
Excellent.
Yeah.
This is Abraham and William for PropertySold.ca.